Opendoor's story hasn't cooled off, if anything, it's spatially expanding. After Tuesday's dramatic sell-off, the stock showed encouraging resilience in the aftermarket, clawing back about 8 cents to settle around $3.30. That kind of bounce matters. It tells us the conversation isn't over, and there's still conviction beneath the volatility. So as we gear up for Thursday's pre-market, let's unpack the latest narrative threads, where momentum might be headed next, and what you, retail investors and subscribers, should be watching closely. After jumping to $4.10 midweek before collapsing, opens at $3.22, and stabilizing near $3.30 after hours, Opendoor now appears to be building a base in the $3.20 to $3.30 zone. That's structurally important. Given how dramatic the run-up was, a retracement was expected. If this range holds, Friday's session might deliver a cleaner reset and potential bounce. But risk remains. If support breaks, we could see a deeper retracement toward $3 or even lower. On the upside, a strong recovery above $3.50 and sustainable move beyond $4 would signal the next leg of this trade still has legs. Here's a narrative twist you don't often get. Eric Jackson, famed Opendoor bull and hedge fund manager, took to X this morning with a cheeky campaign, tagging Drake and urging the music icon to buy Opendoor stock. Yes, that's right, celebrity outreach entered the chat. It's a tactic, certainly, and one that blends meme stock energy with pop culture power. Jackson's move keeps Opendoor trending, even as retail mood shifts. If nothing else, it injects a fresh headline into a story that's already captivated a generation of traders. Adding another layer, Anthony Pompliano just issued a call to action. He'll compile shareholder-sourced ideas, from product upgrades to business strategy, and present them directly to Opendoor's board and management. This isn't a mere thought experiment, it's retail governance in action. Whether you've got ideas for user interface improvements, new referral pathways, or operational changes, Pomp wants them. Encourage the community to contribute. If enough traction builds here, this could reshape how companies view retail input. As all this narrative buzz plays out, the interim leadership under Srisha Radha Krishna deserves attention. He continues to engage retail investors with transparency, conveying a we're-listening image that contrasts sharply with the passive leadership perception in many tech plays. Meanwhile, voices like Jackson suggesting bold names like Travis Kalanick for CEO signal retail wants more than someone who stabilizes, they want a vision plotter. That vision? Opendoor transforming from an asset-heavy home-flipping iBuyer into a lean, tech-enabled platform, what some call the Airbnb of housing. That's the long-term goal. But it needs disciplined execution to get there. Behind all of this, economic policy remains a pivotal factor. Market eyes are glued to Jackson Hole and Powell's forthcoming speech for clues about rate easing. A hawkish tone could dampen speculative housing plays like Opendoor. A dovish shift would likely rekindle them. The real estate market's health depends heavily on mortgage rates. Even a hint of easier borrowing could catalyze more housing activity, creating tailwinds for the model Opendoor is built on. Macro events, as always, will intersect with retail momentum to shape next moves. So what do we need to watch on Thursday? The key support zone is whether $3.20 to $3.30 holds. A bounce here on volume signals resilience. Resistance levels remain critical too, eyes on $3.50 and $4. Clearing those could re-engage bullish breakout players. Then there's the celebrity spark. Will Drake or anyone from his orbit respond? Even meme stock movement needs a short fuse. Jackson's outreach could supply it. Then there's retail input volume. How many ideas are being funneled for Opendoor's board? The engagement rate alone will reflect sentiment direction. And of course, macro signals, Jackson Hole, FOMC talk, and housing data releases could realign speculative risk. Finally, volume and options flow will tell us whether institutions are still watching. Call volume surges, short interest changes, and block trades all matter. The story of Opendoor heading into Thursday is far from one-dimensional. You've got the price reset post-rally, retail creativity and meme-style energy evolving into strategic corporate dialogue, and macro uncertainty setting up a pivotal backdrop. For retail investors, this is a moment to engage thoughtfully, vote with ideas, not just trades. For institutional players and strategists, watch how the stock reacts to leadership signals and macro cues. And as always, volatility cuts both ways. Today's plunge could be liftoff's calm before the next breakout, or the start of deeper consolidation. But Opendoor still feels like a story in motion, A tech real estate hybrid at a crossroads shaped not just by fundamentals, but by culture and narrative energy. That combination continues to make it one of the most compelling setups in retail investing today.